Fantastic, that started. So yeah, welcome everyone to our webinar on financial inclusion and economic abuse. I'm Sarah Darcy, I'm the head of advocacy and communications at Surviving Economic Abuse. And yeah, we're really excited to be welcoming you to this webinar today. If we can go to the next slide, please, Lauren. So just wanted, before we go into the session today, is just to give an overview of what surviving economic abuse does and our vision for a world in which all women and girls can achieve economic equality and live their lives free of abuse and exploitation. So everything we do as a charity is about raising awareness of economic abuse as a form of domestic abuse. That is when a current or ex-partner controls the money, but also the economic resources. So think housing, transportation, access to goods and services, including essential items like food, clothing, access to a mobile phone. And also we're all about transforming responses to it. So building on some of the legislation and regulation and guidance that sets out how society can best respond to this form of abuse and support survivors. So just running through the session today, we've got two, if you can go to the next slide, please, Lauren. We've got two experts from our team. So we've got Lauren Garrett, our Senior Financial Services Manager, and we've also got Deidre Cartwright, our Senior Policy and Public Affairs Manager, who will be talking to you about the financial inclusion strategy that was published by the government last week, and particularly how this relates to economic abuse, following lots of economic abuse measures that was set out in that strategy. We're going to be putting that within the context of what it means for financial services firms. And also Lauren is going to speak to our good practice guide and some of the tips and best practice case studies that are featured in that can really support the industry to achieve this, as well as covering what next steps we can take together. So I'll hand over to Lauren to take us into the webinar. Thank you.
Thank you, Sarah. Hi, everybody. It's lovely to be here with you this afternoon. So to start, I think as many of you on this call may already know, I thought it would be quite helpful to define what economic abuse means and how it is set out within the Domestic Abuse Act. And this is likely to be something that you have come across and come across every day in your work. But this is just to make sure that we're all kind of on the same page when we're discussing economic abuse throughout this webinar. So as you'll see on your screen, economic abuse is defined within the 2021 Domestic Abuse Act, which gave for the first time an official legal definition of economic abuse, and it describes it as any behaviour that has a substantial and adverse effect on a person's ability to acquire, use or maintain money or other property, or to obtain goods or services. And so what does this mean? Economic abuse can involve the control over somebody's income, their spending, their bank account, their bills and borrowing. It can include things like limiting access to housing, transportation, utilities. It could be refusing to contribute to household costs, taking out credit in a partner's name, or destroying property to cause debt and dependency. And at Surviving Economic Abuse, we describe three broad ways in which economic abuse operates, and that is restriction, exploitation, and sabotage. And I'm just going to briefly run through what that means. So restriction happens when a perpetrator limits access to money, work, or other economic essentials. So for example, stopping a partner from using their car or accessing their car keys in order to take their children to work, in order to take their children to school or to go to work, or withholding access to money. Exploitation is when they use a partner's resources for personal gain. So that might be forcing them to pay all of the bills, building up credit in their name, or living rent-free whilst refusing to contribute to household costs. And then finally, sabotage is when they deliberately damage financial stability. So that might include cancelling payments, hiding bills, destroying items, or running up debts that harm somebody's credit and prevents independence. And what's really important to remember is that these behaviours rarely happen all at once. They build gradually over time, and they're small acts that form a sustained pattern of control. So what might start as a partner checking spending or helping with the finances can turn into somebody demanding receipts, restricting access to online banking, so taking over all passwords and PINs, and isolating a survivor from all financial decisions. And what's really crucial is that even after separation, this control can continue, particularly through the use of joint financial products. So that might be joint bank accounts, shared debts, or through legal ties such as mortgages. And we're going to talk a bit about that today. It's also important to remember that economic abuse occurs alongside other forms of coercive control. So it isn't always about money itself, which is why as a charity we use the term economic abuse as opposed to financial abuse. And it's about power, control and dependence. Economic abuse is a form of coercive and controlling behaviour, and coercive and controlling behaviour is a crime. And just to put this into context, our research shows that 4.1 million women within the UK experienced economic abuse in the past year alone. And nearly 1 million of those women were prevented from leaving a dangerous abuser because of economic abuse. And further, 1.5 million women reported experiencing anxiety, depression, panic attacks, or suicidal thoughts as a result of the economic abuse that they've experienced. So, as I've already explained, economic abuse adds to the multiple barriers that survivors face when they are trying to flee an abuser. And ultimately, it creates economic dependency and instability. And this has three kind of main impacts on a victim survivor. It prevents them from leaving. If you don't have access to economic resources, money, transportation, how can you flee? It creates challenges for victim survivors to rebuild their lives. So, for instance, if survivors are left in mountains of debt, if they have joint finances that are tied to the abuser, or their credit rating has been destroyed as a result of the abuser's actions. And finally, it can be the thing that means survivors return. And we know that on average, a survivor will return to a dangerous abuser up to 7 times before they're able to finally access freedom and safety. And so what I kind of want to leave with you on this slide is that the link between physical safety and economic safety is intrinsic. And the longer that victim survivors are in physical proximity with an abusive partner, the higher the risk of physical harm, including homicide and suicide. And that's why this work is so, so important. So why does this matter to financial services firms? I think I've already quite clearly set out why this is an important issue that matters to everybody on this call today. But in particular, we know that financial services firms play a crucial role in both identifying when economic abuse might be happening, providing support to victim survivors, but also closing down opportunities for abusers to weaponise financial services and their products. And our research found that 4% of survivors reported seeking help from their bank in a year alone. So that's the equivalent of over 165,000 women who disclosed to their financial service provider that they were experiencing economic abuse. And we know from our research that they can only do this when they know what support is available to them. And that often means that financial service providers sit on the front line. And sometimes you're able to spot signs of control before anybody else does. So you might be able to see red flags on a customer's account that indicate they're experiencing economic abuse, and they may not even realise it themselves. We know that victim survivors of economic abuse fall within the FCA's definition of vulnerable customers. So that's where domestic abuse, including economic control, is a key life event which drives vulnerability. And we also know that this vulnerability is complex and multi-layered. So survivors might have limited access or no access to their own money, to their bank account, or to their ID documentation. And many flee with just the clothes that they have on their backs. They may also face damaged credit files, as I've already mentioned, due to coerced debt or unauthorised borrowing. And it may be that they feel really unsafe to speak to their bank about the experience they've had. And that's why, as I've mentioned, financial services have a crucial role to play. So by recognising control, restriction, exploitation or sabotage, you can act early to prevent harm. And preventing harm is really key, and it's built into the FCA's regulation through the Consumer Duty 2023, but also its guidance for the fair treatment of vulnerable customers, which recognises good practice, such as having specialist teams who are trained to support survivors who are experiencing economic abuse. It's also built into the Domestic Abuse Statutory Guidance, which sits alongside the Domestic Abuse Act. And finally, UK Finance's Financial Abuse Code. And actually, I say finally there, I think more recently, and the purpose of today's webinar is the focus of the government to recognise the role that financial services play in response to economic abuse within its financial inclusion strategy. And that leads me quite nicely to hand over to Deidre, who's going to speak to us about that in some more detail.
Thanks very much, Lauren, and thanks for setting the scene so helpfully. So as Lauren has just said, we're very pleased that the government continues to recognise the vital role of financial services firms in response to economic abuse through the Financial Inclusion Strategy, which was published last week. And for many of you who probably haven't been following the development of the financial inclusion strategy, over the last year, the government has been working closely with a group of cross-sector stakeholders through the Financial Inclusion Committee to develop a strategy that sets out how the government will work with cross-sector stakeholders to remove barriers to UK individuals' financial inclusion from products and services, and therefore the economy. And many of us already knew that UK individuals' financial inclusion was a significant issue, but that this was both exacerbated and accelerated by the global pandemic, as well as the cost of living crisis. So the government setting out a financial inclusion strategy was really welcomed news. So when we talk about what the financial inclusion strategy is, it covers 6 key policy areas to address different forms of financial exclusion across a range of financial products and services that are necessary for individuals to access to be able to have financial stability and inclusion. So these key policy areas, which were analysed by the Financial Inclusion Committee and then included within the Financial Inclusion Strategy, include access to banking, digital inclusion, access to savings, insurance, as well as access to credit, and then means in which individuals who have problem debt can access safe, reliable specialist debt and money advice and debt solutions. That means they can access future credit and financial services and products. And the financial inclusion strategy also looks to education as one of the ways in which financial exclusion can be prevented, especially amongst children and young people, by making it a part of the national curriculum so that young people and children understand what different financial products and services are, how they can engage healthily with these products and services in the future. And by focusing on these 6 key policy areas, the government recognises that many, UK individuals are excluded from accessing these necessary products and services to be able to actually participate in the economy. However, the government also recognised that specific individuals and groups, particularly those who are considered vulnerable to financial harm and hardship, are at an even greater risk of being excluded from financial products and services. And that's across both the private and the public sectors. And it's especially when these products and services have not been designed or delivered with the needs of vulnerable individuals in mind that they cause the most significant harm. And we really have to think about that in the context of the global pandemic, the cost of living crisis, and many other circumstances that have led to an acceleration towards the digitalization of products and services, the closure of many high street banks and building societies, but also as we've increased towards a cashless society and have begun to increasingly depend on AI. And in recognition of the unique barriers faced by vulnerable individuals who are at increased risk of financial harm and hardship, the government established a set of cross-cutting themes that would sit across each of the key policy areas. And we were really pleased that following our influencing work, as well as the influencing work of many of our partners, economic abuse was named as one of just 3 of the cross-cutting themes within the financial inclusion strategy. And this included mental health, accessibility, and then, of course, economic abuse. And this really gave recognition to what Lauren has set out just now, that the fact is that economic abuse is not only a vastly prevalent problem affecting 1 in 7 UK women's financial inclusion, but also that survivors' financial exclusion directly results from abusers' deliberate misuse of financial products and services, and that the consequences of this exclusion is life-threatening. Because when victims and survivors cannot access money and economic resources, such as an independent bank account, safe credit, savings, or when they are burdened with problem debt and they can't access specialist debt and money advice or effective solutions, then they simply don't have the means to leave a dangerous abuser, and they can't rebuild their financial independence and stability if they do leave. Lauren, can you please go to the next slide? Thank you very much. So at Surviving Economic Abuse, we used our expertise and our influencing position to demonstrate to the government and the Financial Inclusion Committee exactly how and why economic abuse survivors face financial exclusion across each of these key policy areas. And we made clear recommendations for how we advise each policy area should address these exclusions. So looking at each of these in more detail, first is access to banking. So accessing an independent bank account is really fundamental to victim survivors' financial inclusion, because it really is a gateway to accessing other financial products and services and economic resources. So that includes somewhere safe to receive your salary and your benefits, a way to access housing and employment, and also using a bank account to pay for other financial products and services such as insurance. And we know that abusive partners and ex-partners are well aware of how fundamental an independent bank account is to victims and survivors. And therefore, we also know that abusers routinely control victim survivors' access to an independent bank account as a form of economic abuse. And this includes tactics like preventing them from opening an independent bank account in the first place, using threats of harm, hiding necessary identification and documents so they can't open up an independent bank account. It may mean that the victim survivor is forced to only share a joint bank account with the abuser, which they can't access, but all of their income goes into. We also know that an abuser will use their access to a victim survivor's bank account to control and keep tabs on their spending as well as their whereabouts. And we also know that when victim survivors, if they leave, oftentimes they're forced to do that with only the clothes on their back. They often are left homeless, left without necessary identification and documents that make it difficult for them to even open a bank account when they do leave. And when we're existing in an increasingly cashless society, that makes it even more difficult for victim survivors to access the economic resources they need to safely leave, whether that's, paying for a taxi, a train or getting food for themselves or their children. And this really plays into victim survivors' digital exclusion as well. So we know that abusers are taking advantage of an increasingly digitalized and frictionless access to financial products and services to economically abuse. And this includes abusers being able to access victim survivors' information and passwords to take on or end or control financial products and services. But we also know that as services become increasingly digitalized, victim survivors can find it increasingly difficult to find a trusted person to speak to about their experiences of economic abuse and to seek help. And that's particularly in the context of what I've said before about high street banks being shut down, so that victim survivors don't have that face-to-face contact to be able to disclose economic abuse. And when we look at other financial products and services like insurance, we also see how abusers are manipulating these products and services to economically harm and exclude victim survivors. So from the work that we've done with financial services, we know that abusive partners and ex-partners also deliberately misuse insurance products as a form of abuse. And this includes tactics such as preventing a victim survivor from being able to take on insurance cover in the first instance, or maybe canceling insurance cover without a victim survivor's consent or knowledge. It can include tactics such as causing damage to assets which are covered by insurance, knowing that this would increase premiums and costs and make it difficult for a victim survivor to access future products. But as Lauren also spoke to earlier, abusers will use joint insurance products, particularly joint life insurance products, as a form of post-separation abuse and control. And this is because of the nature of those products, which means both parties' consent is required to end or change that, even after the relationship is ended. So many victim survivors find that years after they've ended the relationship with the abuser, that they're still tied to them through the life insurance. And what that means in practice is if they were to die, that abuser could financially benefit from their death. And abusers use this as a means to coerce and control through making threats to kill. But we also know that this has been linked to an incentive to kill. And we also know that victim survivors are prevented from saving because of economic abuse. And I think, it's quite straightforward to understand why that's the case. When your income is being controlled, when you're coerced into debt, when it costs you thousands of pounds to actually leave a dangerous abuser, then you simply don't have the means to save towards your future. So, in the context of leaving, experiencing homelessness, destitution, unemployment, when you can't save and when you haven't saved, one financial problem can easily become a financial crisis, and it can be incredibly difficult for you to rebuild your life. And as Lauren has also alluded to earlier, victim survivors are routinely coerced into debt by abusive partners and ex-partners as a form of economic abuse. And this includes when abusive partners and ex-partners take on a debt in the victim survivor's name without their consent or without their knowledge, possibly through force, but also misinforming victim survivors about the nature of that debt. And when victim survivors, and if victim survivors are able to leave an abusive partner, they're burdened with thousands of pounds of debt. And in the context of other forms of economic abuse and hardship, it becomes increasingly difficult for victim survivors to manage these debts, which we don't believe victim survivors should have to manage anyway. And then when they do, they find it difficult to access reliable specialist debt and money advice and debt solutions that meet their needs. And lastly, as Lauren has spoken to already, generally within UK society, there is limited understanding and awareness of economic abuse, and that includes victim survivors, their friends, their family members, but also professionals who are best placed to respond to it. How financial products and services are used to economically harm victim survivors, but also there's a lack of awareness and understanding about actually the kind of support that financial services can provide to victims and survivors. So as you can see, each of these 6 key policy areas are really crucial to victim survivors, and making sure that the financial inclusion strategy really effectively addresses each of these issues was a key policy influencing priority for us. And And if you can go to the next slide, Lauren, I just want to share with you some statistics that we shared with the Financial Inclusion Committee as well as the government to really labour that this is not only a significant issue for the victim survivors that we consult with on a regular basis, but that through our research that we do at a national level, through nationally representative surveys, we found that all of these forms of economic abuse and exclusion is vastly prevalent for victim survivors. So as Lauren said, 4.1 million UK women experienced economic abuse in the last year alone. 750,000 UK women in the last 2 years experienced joint mortgage abuse. 1 million experienced a partner ex-partner taking out credit in their name without their consent or their knowledge. Another million UK women were prevented from accessing an independent bank account or blocking their access to a joint bank account as well. So as you can see, this is vastly prevalent and it has a devastating impact on victim survivors' lives. Lauren, if you can go to the next slide, please. Thank you very much. So when the financial inclusion strategy was published last week, we were really pleased to see that economic abuse was not only named as a cross-cutting theme, which is something that we were expecting, but to also see that it was addressed across the majority of the policy areas set out within the strategy. And even where economic abuse isn't explicitly named within the strategy across each of these areas, we can see the direct benefit to victim survivors of some of the commitments that were made. And we truly believe, and our influencing work will focus on this going forward, that if these commitments are turned into actions, and if these actions are taken in collaboration with ourselves at Surviving Economic Abuse and with victim survivors, we think that they could have potentially life-saving benefits for victim survivors, including children. Some of the key areas that from the strategy that I wanted to pull out for you today include a focus on coerced debt. So within the financial inclusion strategy, really for the first time that we're aware of, the government has named and defined coerced debt. And it has not only defined coerced debt and the level of force and coercion used by abusers to, coerce victim survivors into taking on these debts, but it also recognizes the significant harm that it causes victim survivors through credit destruction. And within the strategy, it sets out a commitment for surviving economic abuse, lenders, the 3 major credit reference agencies, and UK Finance to work together to devise a consistent approach to coerced debt that includes solutions for restoring victim survivors' credit scores in cases of economic abuse. And we think this is a huge win for victim survivors, and we're really looking forward to working with stakeholders to see how we can turn this into a reality for victim survivors. But this really is only a starting point, and we see this as a golden opportunity. And it is really an opportunity to, I think, illustrate and build on the good practice that is already being demonstrated within the financial services sector in response to coerced debt that I know Lauren is going to go into a bit more detail about in a few minutes. The other thing within the financial inclusion strategy that we are really pleased about is that it recognizes that victim survivors hold debts across both the private and the public sector. So 50% of victim survivors' debts are within the public sector. This includes council tax or wider local authority debts, debts with the DWP, HMRC, for example. So as much as it is incredibly important that private lenders have an effective response to coerced debt, it's equally important that the public sector is identifying economic abuse and how this relates to victim survivors' public sector debts, and that they are equipped to respond to it to the same degree that the private sector is. So we were really happy to see a commitment within the financial inclusion strategy for the Treasury to update its economic abuse toolkit for public sector bodies, and also a commitment to develop training for public sector professionals on how to identify and respond to economic abuse alongside the other vulnerabilities set out within the financial inclusion strategy. We're also really pleased to see within the strategy a commitment from the Association of British Insurers to develop industry-wide insurance guidance on responding to economic abuse. And we're really looking forward to the opportunity to collaborate with the ABI and other insurance bodies, such as the CII, to make sure that this guidance really reflects the needs and experiences of victim survivors. And we hope that this really provides a building block for the government to consider where they can support insurance providers to better support victim survivors, but to disrupt opportunities for abuse of their products and services. So considering potentially where legislative or regulatory reform may be necessary to address issues related to joint insurance products, such as joint life insurance. We were also incredibly pleased and quite surprised to see that joint mortgages were specifically recognised within the financial inclusion strategy. And again, like coerced debt, and to our knowledge, this is the first time that the government has recognised within strategy that joint mortgage abuse is an issue, and the prevalence and impact that this has on victim survivors' lives. As I've said earlier, we know that 750,000 UK women have experienced economic abuse through a joint mortgage in the last 2 years alone. This was set out in groundbreaking research that we published in 2024. And we set out the different things that financial services can do right now under current guidance and regulation to support victim survivors who remain trapped in a joint mortgage with abusers. But our report also recognized that lenders are limited in the support that they can offer victim survivors because of the nature of joint mortgages, where they have to balance their obligation to both parties. And that's why we're really happy to see that the strategy sets out how government is going to consider further reforms that might be necessary to make it easier for lenders to respond to joint mortgage abuse. And we've been calling for this to include guidance from the Financial Conduct Authority that clarifies the role of lenders in response to joint mortgage abuse. But we've also called on the government to consider legislative reforms that would make it much simpler for firms to treat victim survivors and perpetrators separately. And lastly, what we are really happy to see within the financial inclusion strategy is that it has really built on the foundations that Lauren has mentioned earlier of UK Finance's Financial Abuse Code, the Consumer Duty, the Financial Conduct Authority's Vulnerability Guidance, and the statutory guidance underpinning the Domestic Abuse Act to recognise the vital role of financial services firms in identifying economic abuse and responding effectively to it. But it also recognises the role of financial services, membership bodies, and consumer groups and representatives in inclusively designing products and services from the beginning that not only promote victim survivors' financial inclusion, but disrupt opportunities for harm, especially as we move towards, as I said, an increasingly digitalized financial products and services. So really thinking about how can this change lead to increased inclusion for victim survivors, increased identification of their needs, and shut down opportunities for abuse. And we'll share some resources in the chat, but we published some research just this week, which brought financial services and victim survivors together to look in detail at how financial products can be inclusively designed to support survivors and disrupt opportunities for abuse. And if you can go to the next slide, please, Lauren. I just wanted to end my section of the presentation on a quote directly from the financial inclusion strategy that I think really summarizes how important financial services role is in response to economic abuse and how good practice really is the cornerstone of all of this. And at Surviving Economic Abuse, we'll continue to work with financial services firms to develop and share this good practice so it's consistent and at scale, but we'll also be working hard to influence the government and all other stakeholders involved in delivering the financial inclusion strategy so that it continues to be grounded in the needs and experiences of victims and survivors of economic abuse, which is the most important aspect for us. So I'll hand back over to Lauren now to share about this good practice.
Thank you, Deidre. That was a really comprehensive and informative overview of the financial inclusion strategy and what it means for financial services moving forward and for our work. And I guess it feels like a really celebratory moment to have the strategy published last week and for economic abuse to be so prominently featured within it, particularly in regards to some of the calls that we've been making for a while now in relation to coerced debt, credit restoration, and in particular joint mortgage economic abuse. But we know that this isn't work that we can do alone. It's through collaboration and partnerships across the sector that have brought us to this point. And I guess it feeds really nicely into the publication of our good practice guide for financial services, which I had to quickly go and dash to get it to show you all, which was published last month. And really celebrates all of the fantastic work that the industry has done to date in both recognising economic abuse, providing support to victim survivors, and as we've mentioned quite a few times throughout this presentation, actually taking innovative and proactive steps to start closing down opportunities for perpetrators to weaponize your services and your products, and the ways in which that these cause significant harm. And so the guide was developed to do that, to celebrate all of the work that's happened to date, but also to share this good practice. I know certainly when I joined C over 3 years ago now, there was quite a hesitancy for firms to share the incredible work that they were doing to support victim survivors. Particularly, there were fears around whether or not this was a competition issue, and you know, if this information was shared, would it kind of open the floodgate to lots of claims? And of course, that's not what we see. We know that if victim survivors know that support is available, they are more likely to access it. And as we've spoken to, that help survivors to access safety and can actually be life-saving in terms of the support that they receive. And so the Good Practice Guide kind of brings all of that together. It sets a benchmark, but also it gives us a place to kind of start from and elevate from in terms of the support that is currently being offered. And it provides some really practical examples of what firms are doing, and it also draws upon the regulatory frameworks that already exists and kind of shows you how you can go further. And our aim is to tackle economic abuse at scale. We want consistently good outcomes for survivors, no matter who they bank with. And we know from our research that survivors don't always get that consistency. We know on average that survivors will hold debts between 5 and 9 different creditors, and they can receive different outcomes from each creditor. They have to retell their story multiple times, and they may not access the support that they need. And in the worst case scenarios, survivors are left in a position where the financial service provider can inadvertently start to facilitate that abuse, particularly through joint products and services. And so in terms of what's in the guide, as I mentioned, it really gives an overview of the pioneering work today, and it's broken into 5 sections. And the first of which is understanding what economic abuse is and supporting victim survivors to disclose. And as has been recognised within the financial inclusion strategy, we know that training is key to this. And we give a case example of Barclays Bank, who partnered with C to deliver specialist training on economic abuse and financial services to over 320 of their colleagues. And this really equipped colleagues to be able to recognise when customers might be demonstrating signs that they are experiencing economic abuse. So we speak of sort of red flags that are quite nuanced and may not be easily identified. And all of these colleagues sit within Barclays Vulnerable Customer team. We also speak about the importance of public awareness campaigns. So some of you might remember HSBC had a fantastic campaign a few years ago, which kind of depicted a puppet on a string and had the tagline, when an abuser controls your finances, they control you. And we know that that campaign was really powerful in raising awareness of economic abuse and encouraging customers to know that they can come forward and access support from their financial service provider. The second section looks at communication and engaging with victim survivors. And within this, we found the work that TSB has done to set up safe spaces has been really key for survivors who are still able to access support in branch. And for some survivors, being able to access support in person is crucial, particularly given the sort of detail that Deidre's given about access to digital banking and the way in which that can be controlled and surveyed by an abuser. Actually being able to go into branch and access support is really life-saving, and it's been fantastic to see the number of major high street banks who've been able to open safe spaces both within branches but also digitally. And to diversify the ways in which survivors can disclose. So we've seen things like Monzo's Share With Us tool, which is a tool that's built into its digital app, which enables customers and victim survivors to disclose if they are experiencing a form of vulnerability and need further support from their financial service provider. We've also seen things like online forms where survivors can disclose online and ask for a callback at a time that is safe for them. So both Barclays, HSBC and Lloyds Banking Group have these kind of forms on their digital platforms. And this is really key so that survivors can access support at a time that is safe for them and that they're in control of. And also minimising re-traumatisation through survivors having to tell their story multiple times. Often we hear from survivors who feel that they've been passed from pillar to post within financial services firms trying to access support. And many firms are now using the economic abuse evidence form to be able to receive information that a survivor is experiencing domestic abuse and offer support options, particularly in relation to debt and coerced debt. And we've seen that that has led to increased debt write-off for victim survivors who've experienced coerced debt, and also credit restoration, which is so crucial to enable survivors to move forward safely and rebuild their lives independently. And then we've also seen firms providing more tailored and flexible support to victim survivors. And a key aspect of this is the specialist domestic abuse team that Lloyds Banking Group set up a good few years ago now in partnership with Surviving Economic Abuse. And as far as we're aware, Lloyds Banking Group remain to be the only high street firm that have a dedicated financial and domestic abuse team who have been trained by Surviving Economic Abuse to offer specialist support to victim survivors. And that team, when the Good Practice Guide was published, have provided support to over 18,000 customers. And we know that that number might seem quite small when you think about the sheer volume of customers that a major bank like Lloyds Banking Group are providing support to. But that's over 18,000 victim survivors who've been able to access support and start to rebuild their lives. And that's really fantastic. And it remains sort of a key a key step that firms can take to support victim survivors is having those specialist trained individuals who know how to handle calls in a way that's safe and trauma informed. And so we're really delighted to continue our partnership with Lloyds Banking Group and work with them day in, day out to provide this life-saving support. In addition to that, TSB have implemented a flea fund, and this is available to all customers and colleagues who may have experienced economic abuse. And TSB will provide financial support of up to £500, so a non-repayable amount to colleagues and customers who are escaping domestic abuse. And TSB have supported over 700 people who are experiencing domestic abuse. And it's really interesting that TSB have been able to kind of take this action and also report and record customers who are coming forward. Almost half of the customers they've supported have fled with children. And only 36% of payments are for the full £500 that they offer. So many are much lower. And this is to support with survivors sort of the basic things that they need in order to flee. So the cost of a train ticket, the cost for petrol, the cost for a night in a safe hotel, you know, those really, really key things that survivors and their children need in order to access safety. So this is a really innovative, and again, I feel like I say it about all of these steps that firms have in place, but life-saving support that TSB are able to provide to customers. And there's so many others. You might see some of the other sort of things on my screen here that speak to the other things that firms are doing. So I do recommend that you read the guide. But I just wanted to also draw out the work being done around safe and inclusive product design, because again, this was a key call out within the financial inclusion strategy, and we're already seeing firms do fantastic work in this space. We worked with Starling Bank a few years ago to implement a hide references feature within their online app. And for those of you who don't know, this is where abusers are able to use payment references in online banking to send abusive messages to victim survivors to cause fear and to harass them when all other forms of communication have been stopped. And Starling Bank, working alongside a victim survivor experiencing this form of economic abuse, were able to quickly and really effectively implement a solution which enabled the survivor and many other survivors since to take control back of their online banking by enabling them to toggle hide payment and hide the abusive messages so that they no longer have to be subjected to it. And you might think, why aren't the payments blocked or why aren't they stopped? But often these payments are for child maintenance. And so stopping those payments means that, again, that the survivor experiences economic harm because then they have to go without. And so this solution is really key, and it's been supported by UK Finance and Pay UK, and we know that a number of other firms are also looking to implement solutions such as these. So it's a really, really fantastic step forward. And there's also an example within the guide of Nationwide working alongside experts by experience who work with surviving economic abuse, again, to get their feedback on a digital solution that they're putting in place. And we're seeing more firms reach out to us for support in these kind of things. And this is really, really key. Engaging with survivors to ensure that products are safe from the outset means that they'll be safe and accessible to all customers. And so we really encourage more of this. And as Deidre has already spoken to, our research, which was published just this week alongside Northumbria University, designing out economic abuse in the UK banking industry, really kind of brings this to life. And there are some really practical and fantastic ideas in there, and ideas that have come from survivors and professionals working together. So we'll pop a link to that in the follow-up resources, but I really recommend you take a read of that. And if you're kind of inspired by any of the ideas on there and you want to discuss it with us, please do reach out, because I'd love to have a conversation with you about how your firm might be able to take this work forward. And then finally, there's a section within the guide that looks at prevention, so how financial services can actually stop economic abuse. And certainly there's still a lot of work to be done in this space, and we draw upon examples that have been implemented within France, in the insurance space, and within Commonwealth Bank in Australia, and to actually hold perpetrators to account, and to close their bank account when it's being used to cause harm. We've also been doing some work with HSBC within the UK context to really look at mortgages and how joint mortgages are weaponised to cause harm to victim survivors, and to think really creatively about how firms like HSBC can provide greater support. And working in collaboration with charities like Surviving Economic Abuse really enables firms to have that kind of test it and see environment, so that we can take some of these ideas and see how they actually work in practice. So that's just a very brief overview of the guide. And I guess just to kind of tie all of this together, I also wanted to end on a quote. And this is from Lucy Rigby, so the Economic Secretary to the Treasury, who has endorsed our Good Practice Guide. And we were absolutely thrilled with that endorsement. And of course, has been crucial to leading the financial inclusion strategy within the Treasury. And she says that tackling economic abuse is a key priority for the government, and certainly that's what we've seen from the strategy. And it's an integral part of cracking down on violence against women and girls. And she commends C's incredible work, and as the City Minister remains committed to working closely with the industry and across government to build on the best practice highlighted within our report. And so we were really thrilled to receive that endorsement from Lucy. And so just to summarise, I have some calls to action for you. And I guess if you are feeling inspired, want to know how your organisation can put some of these ideas into practice, get in touch and come and speak to us today. As I've mentioned, we are really keen that more firms are trained to offer support to victim survivors. And for those of you who are on today's call, you will receive a limited 10% off of our financial services and economic abuse training. So we'll send you details about that. But you can arrange for colleagues to have training. You can access our consultancy, as I've mentioned, to think about how we can support your organisation and the ways in which it's currently responding, recording, and supporting victim survivors who are experiencing economic abuse. Also, you can work with Surviving Economic Abuse and the Expert by Experience group to co-design products and services that are safe and trauma-informed for victim survivors. You can also sign up to our financial services newsletter where we share good practice, and also we give policy updates, research and things like that, as well as things that are coming out of the government. So the financial inclusion strategy, for instance. You can sign up to the banking support directory, where all of the support that firms offer is held in one place, and you can put all of the information that your firm, all of the information about the support, should I say, that your firm offers on your website. Put it out there so that survivors can see it and they can access that support. And then finally, if you aren't already, I'd really encourage you to become a signatory to the Financial Abuse Code, because this really gives a framework for firms to work towards. So that is everything. We said that we'd give you time for questions, and we are very swiftly running out of time. If you want to get in touch, here's details on the screen here about how you can do that, and we'll also share some follow-up information in the comms. And I guess I just wanted to end with a thank you. Thank you all for taking the time out of your busy days, especially over lunch, to come and hear us talk about this important issue. it's I don't want to sort of no, get my words out. I guess I just wanted to end by saying that together we can save lives and stop economic abuse. It's something that I, within the C team, sort of say all the time, and I love to end a presentation on that. But I hope that really inspires you to know that you can take action today that does make a difference. And yeah, and if there's anything we can do to support your work, please do be in touch. Thank you.
Thank you so much, Lauren and Deidre, for that presentation. It was absolutely fantastic. And we've had some amazing questions in the chat. I realise we've just got a couple of minutes, so we'll try and move through as many as we can before we jump off, but we will be following up with resources and information about how to get in touch if you want to find out more. So if you do have burning questions, you can follow up with us afterwards. So we had one question from Catherine in the chat, which was about statistics around male victim survivors of economic abuse. I just wanted to flag, I did answer that in the chat. So economic abuse can happen to anyone, including men, although figures show it does disproportionately impact women and particularly marginalised groups like Black, Asian and racially minoritized women and disabled women. The ONS has started collecting data on economic abuse and disaggregates that by men and women. So that's the first time we've had data sets about both men and women from government. So I've shared the link to that in the chat. I'm going to go on to Hannah's question next, which was a really interesting one, which was whether, we've observed victim survivors and or perpetrators using AI, or how they might use AI to access support and advice, but equally perpetrate control and manipulation. Lauren, I don't know whether you want to sort of come in to answer that one.
Yeah, certainly as the world of AI is developing swiftly, we see more perpetrator tactics, and it can be hard to keep up with it. So I mentioned about sort of digital and online banking and how that is used. We're currently kind of exploring how AI can be used to detect when economic abuse might be happening, and how that can then support firms to kind of get in touch with survivors earlier on and perhaps close down opportunities for abuse. I'm not yet to see, and some of my colleagues might be able to come in here, but I'm not yet to see where victim survivors, where perpetrators, apologies, are using AI specifically to control and manipulate. I don't know if anybody else has anything to add on that.
I think we're definitely sort of seeing it in the kind of online social media space in terms of the manosphere. But I think, I think we know from our experience that perpetrators use any means possible to, enact economic abuse. So I think that's why it's so important that Lauren and her team and the wider charity are thinking about AI and how it can be used to support survivors and enable firms to intervene earlier, but also having it as a watch out that actually, as banks are developing AI and integrating that into their products and services, we absolutely need to be thinking about how an abuser might be able to misuse that. And there's so much we can learn from survivors about how an abuser might be able to do that, and kind of design that into the AI before it's rolled out and potential harm is caused. So I think it's such a good question from Hannah.
Yeah, and just to also, go on, sorry. I was just going to say, just to add to that, we know that AI is being used to detect certain vulnerabilities already. It just hasn't been extended within the sort of domestic and economic abuse space. And we also know that it's widely used in fraud prevention and detection spaces. So we're really keen to work with firms that kind of know more about this, so that we can also build our knowledge and understanding of it, and see whether or not it can kind of be tested in this format to detect where economic abuse might be happening, and then what firms do with that information once they've detected it. So if anybody has any ideas, please do get in touch.
Fantastic. We'll just go to one final question because I know we're sort of slightly over time. This one was from Ali. We sort of answered part of the question, which is, do we have any guidance for organisations to translate this policy into design practice? But Ali was particularly interested in integrating friction and support into a service design journey. Lauren, I think this is probably also one for you too.
Sorry, Sarah, that was about how
Integrating friction in and support into a service design journey.
Yeah, so that is something that we have been looking at, and it does feature in the report that we published this week, because we know that a number of firms are moving into a frictionless environment to make it easier for customers, but we know that that also causes risk of harm for victim survivors. And so we're thinking about things like cooling off periods to enable survivors to be able to get in touch with their financial service provider if they've been coerced or pressured into taking out a debt or a loan. Also having things again like toggles within the online application form or app that kind of says don't lend to me, it's not safe to lend to me now, kind of drawing upon the work that's happened within the gambling space around GamStop, and that's one of the ideas that came out of the research, as I mentioned. And so yeah, there's a number of things that firms can be thinking about, but it always needs to be balanced, because again, whilst you can take steps to kind of prevent economic abuse from happening, it can also be abused. So for instance, a perpetrator could put that toggle on a victim survivor's bank account to stop them accessing credit, and they might need that credit in order to flee. So everything needs to kind of be nuanced and developed alongside victim survivors, and that's why we think inclusive design is so key to tackling this and getting it right.
Thank you so much, Lauren. Well, I'm afraid we've run out of time today, but that's been a really brilliant session and some really great questions as well. So thank you so much for sharing those in the chat. It's been an absolute pleasure to have so many of you on the webinar today. As we mentioned earlier, we'll be following up with the Good Practice Guide and other resources and research, as well as your 10% discount to sign up to our financial services training afterwards. Thank you so much for joining. And yeah, we're really looking forward to working with you and your teams further to tackle economic abuse and better support survivors so we can save lives and ultimately prevent economic abuse for good. Thank you so much.